code is used to retrieve financial data from Yahoo Finance. It first imports necessary libraries such as IO, RE, and requests. Then, it defines a function getData that takes in arguments such as stock tickers, start and end dates, and frequency. This function uses the requests library to send an HTTP request to Yahoo Finance and retrieve data based on the specified arguments. It also uses regular expressions to extract specific data from the request response. Next, a list of stock tickers is created and stored in the ticker variable. This list contains the stock symbols for different assets like SP500, DSX, Stock 600, and SSE. Then, there is a while loop that attempts to retrieve data from Yahoo Finance using the previously defined getData function. If there is an error, the loop will try again until it successfully retrieves data. The retrieved data is then stored in a pandas data frame named ICP with columns SP500, DSX, Stock 600, and SSE representing the different assets. The data frame is filled with data using the fill new method, and any empty values are replaced with the previous value in the column. Finally, the data frame is returned as the output of the getData function. First line of code takes the current value of the SANP 500 stock index from the ICP data frame and divides it by the first value in the SANP 500 column in order to get the return. It then subtracts 1 from this value to get the percentage change. The next line of code does the same thing for the TSX stock index. The third line does the same for the Stock 600 stock index. The fourth line does the same for the SSE stock index. The final line of code takes all 4 of these index returns and multiplies each one by 1/4, or 25, to get an equal weighting for each index. It then adds them together to get the overall return for a portfolio that holds 25 of each of these indices. This code first creates a figure with a size of 16 by 6 units, then it plots the data points for buy and hold USA, buy and hold Canada, buy and hold Europe, buy and hold China, and buy and hold 25 each on the graph. The x-axis represents time and the y-axis represents the cumulative return in percentage. The margins for the plot are set to x equals 0.005 and y equals 0.02. A horizontal line is also added at y equals 0, with the style of a dashed line and a black color. Finally, the legend is added to the graph and the figure is displayed. Code first divides the current value of the SANP 500, SP500, by the value of the SANP 500 from 252 days ago, and then subtracts 1. This creates a percentage change over a 252-day period, or 1 year. This process is repeated for the DSX, Stock 600, and SSE indices and saved as separate variables. Next, the code calculates the average of the 4 percentage changes by multiplying each variable by 1/4 and adding them together. This creates a composite index that represents an average of the yearly percentage change for the 4 indices. Overall, this code is calculating the percentage change of 4 major stock market indices, SANP 500, DSX, Stock 600, and SSE, over a 1-year period, and then creating a composite index that represents the average of these changes. This can be useful for analyzing overall market trends and performance. First line of code sets the size of the figure to be plotted as 16 inches in width and 6 inches in height. The next 4 lines of code plot the data for different stock markets, USA, Canada, Europe, China, and labels each line accordingly. The x-axis is labeled as time and the y-axis is labeled as returns, in. The next line sets the margins for the plot, with the x margin being 0.005 and the y margin being 0.02. The following line adds a horizontal line at y equals 0 with a dashed style and black color. Finally, the legend is added to the plot and the plot is displayed. code first sets a variable called mar to 0, which stands for the minimal acceptable rate of return. The comment states that this is typically equal to the risk-free rate. Next, the code calculates the Sharpe ratio for various stock market indices. The first line of code calculates the Sharpe ratio for the S&P 500 index by first taking the average return of the index, SP1y.mean, subtracting the minimal acceptable rate of return, MAR, and then dividing it by the standard deviation of the index, SP1y.std. This is repeated for the TSX index, the Stoxx 600 index, and the SSE index. The next line of code calculates the Sharpe ratio for a hypothetical portfolio where 25 of the investment is allocated to each of the 4 indices. This is done by taking the average return of the portfolio, each 251y.mean, subtracting the minimal acceptable rate of return, MAR, and then dividing it by the standard deviation of the portfolio, each 251y.std. Finally, the last lines of code print the Sharpe ratios calculated for each index and the hypothetical portfolio, rounding them to 2 decimal places. By doing this, the code provides a quick and easy way to compare the risk-adjusted returns of these different indices and the hypothetical portfolio. This code begins by importing the minimize function from the scipy.optimize library. Then, a function named multi is defined, which takes in a parameter x and assigns its values to variables a, b, c, d in order. The multi function simply returns these values. Next, another function named maximize_Sharpe is defined, which also takes in a parameter x. Inside this function, the weights variable is defined as the sum of the product of 4 different variables, SP1y, TSX1y, Stoxx1y, S1y, and the values returned by the multi-function when passed the x parameter. This function then returns the negative value of the mean of these weights divided by their standard deviation. A third function named constraint is defined, which also takes in a parameter x. This function returns the value of 1 minus the sum of the values returned by the multi-function when passed the x parameter, essentially ensuring that the weights add up to 1. The constraints are then defined as an inequality, where the fun parameter is set to the constraint function. Next, bound values are defined for the x parameter. These values restrict the values of the x parameter to be between 0 and 1. An initial guess is then made for the x parameter, which is 1, 0, 0, 0, in this case. This initial guess is close to the global optimal solution, which is usually found using genetic algorithms. The minimize function is then called, passing in the maximize_Sharpe function, initial guess, bounds, constraints, and other options including a maximum number of iterations. This function essentially tries to find the minimum value of the maximize_Sharpe function by varying the x parameter within the given bounds and satisfying the given constraints. The resulting values are then saved into the ms variable. Finally, the ms by hold all and ms by hold 1y all variables are defined, which represent the weighted sums of 2 other variables using the values of x found by the minimize function. First line of code sets the figure size to 16 by 6 inches. This means that the graph created will have a larger and wider display. The next 3 lines of code use the plt.plot function to plot 3 different lines on the graph. Each line represents a different method of investing in various assets. The first line plots the cumulative return of a buy and hold strategy for the S&P 500. The second line plots the cumulative return for a strategy where 25 of each asset is invested in. And the third line plots the cumulative return for a strategy that maximizes the Sharpe ratio. The next 2 lines of code set the labels for the x-axis to be time and the y-axis to be cumulative return, in. The plt.margins function is then used to adjust the margins of the graph, giving a small space on each side. The plt.axlin function creates a horizontal line at y equals 0, which can serve as a benchmark for the different investment strategies. The plt.legend function is used to create a legend for the graph, labeling each line with its respective investment strategy. The plt.show function displays the graph. The following 4 lines of code use the print function to display the weights of each asset in the optimized Sharpe ratio strategy, as well as the calculated Sharpe ratio and the median yearly excess return for this strategy compared to the S&P 500. Overall, this code creates a graph of the cumulative returns for different investment strategies and displays data that compares them. The purpose of this code is to visualize and analyze the performance of different investment strategies using historical data. First line defines a function called maximize_median_yearly_return which takes in a variable x. The next line defines weights as a formula that calculates the weighted sum of different financial metrics. On the third line, the function returns the negative value of the median of the weights. Next, the code calls a function called minimize which takes in the function maximize_median_yearly_return, an initial guess, and other parameters such as method, bounds, constraints, and options. This function calculates the minimum value of the weighted sum of financial metrics using an algorithm called SLSQP. The result is stored in a variable called m. Next, the code calculates the weighted sum of buy and hold financial metrics using the weights obtained from the minimization process. This is stored in the variable m buy hold all. Similarly, the code calculates the weighted sum of 1-year performance financial metrics and stores it in the variable m buy hold 1 y all. This allows for comparison between the optimal weights for a long-term investment strategy, buy and hold, and a short-term investment strategy, 1-year performance. In summary, this code calculates the optimal weights for different financial metrics using an algorithm called SLSQP and compares the results for long-term and short-term investment strategies. It ultimately aims to find the best set of weights to maximize the median yearly return for a given portfolio. First line creates a figure object with a size of 16 inches by 6 inches. Then, 3 plots are added to this figure using the plt.plot function. Each plot represents a different investment strategy, buy and hold S&P 500, 25 of each, and max 1y median. The x-axis of the plot represents time and the y-axis represents the cumulative return in percentage. The plt.label and plt.label functions are used to add labels to the x and y-axes respectively. The plt.margins function is used to set the margins of the plot, with a specific value for the x-axis and y-axis. The plt.axline function is used to draw a horizontal line at y equals 0, with a dashed line style and black color. The plt.legend function adds a legend to the plot, with labels for each of the 3 investment strategies. Finally, the plt.show function displays the plot. The following lines use the print function to display the weights of each investment strategy, calculated using the m.x array. The weights are rounded to 2 decimal places and represented in percentage form. The first line displays the weight for the S&P 500, followed by the weights for TSX, Stoxx 600, and SSE. Next, the print function is used to display the Sharpe ratio, calculated as the mean of the returns divided by the standard deviation of the returns. The Sharpe ratio is rounded to 3 decimal places. Lastly, the print function is used to display the median yearly excess return over the S&P 500 for the max 1y median strategy. This is calculated by subtracting the SP1y median return from the max 1y median return and multiplying by 100. The result is displayed in percentage form, rounded to 1 decimal place. Code first defines 4 variables, ytd_sp, ytd_tsx, ytd_stocks, and ytd_sse, which will represent the year-to-date, YTD, returns for the S&P 500, TSX, Stoxx 600, and SSE indices respectively. To calculate these YTD returns, the code takes the data from the ICP data frame for each index and uses indexing to only select the last 252 days of data. It then divides this data by the value of the index on the first day of the selected time period and subtracts 1 to get the percentage return. This calculation is repeated for each index and stored in the respective variable. Next, the code calculates the YTD return for a diversified portfolio, represented by the variable YTD_25 each. To do this, it takes the YTD return for each index and multiplies it by 1/4, or 0.25, representing an equal weighting for each index in the portfolio. This gives an overall YTD return for a portfolio that is equally invested in each of the 4 indices. The code then moves on to calculate the YTD return for a portfolio with the maximum Sharpe ratio, represented by the variable YTD_max_Sharpe. To do this, it takes the YTD return for each index and multiplies it by the relevant weight from the ms.x list, which contains the optimal weights for each index in the portfolio. This allows for a more efficient allocation of assets, as determined by the Sharpe ratio calculation. Finally, the code calculates the YTD return for a portfolio with the maximum median, represented by the variable YTD_max_median. This is done in a similar way to the maximum Sharpe portfolio, but using the weights from the m.x list, which contains the weights that result in the highest median return for the portfolio. Overall, this code performs calculations to determine the year-to-date returns for various portfolios, each with a different weighting strategy, using data from 4 different indices. The end result is a set of variables representing the YTD returns for different portfolio strategies, which can then be used for further analysis or decision-making. First, the code creates a figure using matplotlib and sets the size to be 15 by 6 inches. Then, it plots 4 lines on the figure using the datasets YTD_SP, YTD_25 each, YTD_max_Sharpe, and YTD_max_median. Each line corresponds to a different investment strategy and is labeled accordingly. Next, the code adds the labels for the x-axis and y-axis of the plot. It also sets the margins for the plot to be x equals 0.005 and y equals 0.02. Using the axlin function, the code adds a horizontal line at y equals 0 with a dashed line style and black color. Then, it adds a legend to the plot, which shows the labels for each line plotted. Finally, it shows the plot on the screen. The last 4 lines use the print function to display the YTD performance of each investment strategy. The YTD_SP-1 syntax accesses the last element of the YTD_SP dataset and rounds the value to 1 decimal point. This value is then multiplied by 100 to display the percentage return. This process is repeated for the other 3 strategies, with each line displaying the name of a strategy and its YTD performance. Code starts by creating a new column in the ICP data frame called PRET, which calculates the daily return of the S&P 500 index by dividing the current day's value by the previous day's value and subtracting 1. The same process is repeated for the SSE index and is stored in the SARAY column. Next, the code creates a new column called Strat which combines this PRET and SARAY columns in a weighted average. The weightings of 0.8 and 0.2 indicate that the S&P 500 index is given more importance in the calculation. The next 2 lines of code use conditional logic to change the values in the strat column based on the values in the 's.p. 1y and s1y columns. This is done to adjust the weightings of the S&P 500 and SSE indexes, giving more importance to one index over the other depending on their respective values. The code then creates 3 new variables, dynasol, dynasol1y, and dynasalided, which are all different calculations of the strat column. Dynasol takes the cumulative sum of the strat column. Dynasol1y calculates the rolling sum of the past 252 days of the strat column, and dynasalided takes the cumulative sum of the last 252 days of the strat column. In summary, This code performs various calculations and manipulations on the data in the ICP data frame to create new columns and variables that show the performance and behavior of the SAMP 500 and SSE indexes and their weighted average. This allows for analysis and comparison of these indexes and their impact on the overall strategy. This code displays a plot using the matplotlib library with a figure size of 15 by 6. 3 different lines are plotted on the graph, labeled with their corresponding strategies. The x-axis is labeled as time and the y-axis is labeled as cumulative return, in. The plot is given margins of 0.005 for the x-axis and 0.02 for the y-axis. A horizontal line is added at the y-value of 0. This is followed by a legend that displays the labels for each line. Finally, the plot is shown using the show function. The last line of code displays the median yearly excess return of one of the strategies compared to the SP500 index. This code creates a plot figure with a size of 15 by 6 inches. Next, it plots 3 lines representing the year-to-date, YTD, performance of the SAMP 500 using buy and hold strategy, the maximum 1-year median, and a dynamic asset allocation strategy. The x-axis represents time and the y-axis represents the cumulative return in percentage. The plot is then labeled with appropriate names. The margins of the plot are adjusted, and a horizontal line is added at y equals 0 in a dashed format. A legend is also added to the plot. The code then prints out the YTD performance of the SAMP 500 using the buy and hold strategy, the maximum 1-year median, and the dynamic asset allocation strategy as of July 2020.